Hello and welcome to Personable, a podcast focused on speaking to the world's best to become the best that you can be. Today, I'm honoured to be joined by Ladi Balogun. Ladi is the CEO of First Citi Monument Bank Limited Group, also known as FCMB, which we'll often associate with in this podcast, which is a holding group in banking, investment management, and financial technology. He's an executive sponsor at Rova, a cross-border digital banking platform, the president at Credit Direct Limited, which offers lending and fund management services, a chairman of FCMB Pensions, the former CEO of FCMB, a former associate at Citi and analyst at Deutsche Bank, and a graduate of East Anglia, and he has an MBA from Harvard Business School. I'm incredibly excited to speak to Ladi, but before we get started, whether you're listening to Personable for the first time or you're a returning listener, please make sure to like, comment, and subscribe. Currently, only 3 out of the 100 listeners are subscribed to the podcast, so help us reach our goal of 1,000 subscribers before I get back to Duke and the Four. So Ladi, thank you for joining me. I wanted to get started by asking you, how did your education at Harvard with your MBA prepare you for your leadership at FCMB?
Great. Pleasure being on here, Harvey, and thanks very much for having me on. I'd say the probably most important thing was that it gave me a very good framework to just analyze pretty much every business problem that I have come across in my 30-odd years in financial services, whether it be a finance problem, a marketing problem, an operations problem, a macroeconomics problem. Very quickly, you're able to process, triage the issues and decide who's the best person to actually solve it. And hopefully you don't have to solve it yourself if you're surrounded with competent people. So I think for me that's probably the single biggest advantage, because the Harvard MBA is a general management MBA. Certain schools like Wharton may specialize in finance, Kellogg, in my day at least, maybe more in marketing. And so I can't remember whether Duke has a slight, encourages you to focus on the MBA. I would also say actually the unique learning method of the case study method, in which Harvard was famed for in those days. Again, things may have evolved since then. Was a very unique model that we were dealing with practical, real life business problems every day, 2 to 3 case studies a day, 5 days a week. And by the time you've done that for 2 years, you actually feel like you've actually been working as a manager for 2 years. So it was extremely practical. And even though I would say that it's very different in the real world from in a classroom, it did give you a flavor of the ambiguity that you're likely to face as a leader. Things are not spelt out for you. You don't have a sort of clear path to follow, but you have to figure it out for yourself.
Without being in the industry, there's obviously, banks like Goldman Sachs, Morgan Stanley, Barclays. There are a ton of different banks with different names, and some might associate that with being an investment bank or a commercial bank, but a lot of people might not know the difference on that level, but even why you would need a different bank or how they even go about competing. Could you break down for the viewer what FCMB as a bank, like what it is, and how it initially started and who it aims to help?
Sure. So FCMB is a holding company that owns banks across commercial banking, retail banking, investment banking, and even microfinance banking, which is unique to third world countries. We also own businesses in asset management, and then we own businesses in financial technology, which includes digital banking as well, but also other elements of financial technology such as payments and software as a service. So it's quite a broad spectrum. You could almost see us as a private equity holding company. So all the companies for now that we own are private. But we're different from a traditional private equity in that we hold these companies indefinitely. We don't have a tenure by which we need to exit or sell. And also, we run them as an ecosystem that come together to serve the customer. So if you were going to be an FCMB customer, we would want you to be a customer of multiple companies in our group. So that way we are unlike, let's say, a traditional private equity firm where you have very distinct sort of businesses with distinct customers. So that's how we are. Now, specifically, when we look at the different types of banking we're in, what is the difference between our own investment banking business versus maybe our commercial banking business? The investment banking business that we run is really focused on corporates and governments. It helps them either raise capital or it helps them do other strategic things like mergers and acquisitions. Whereas the commercial bank is very operational. It helps you keep money for the short term in current accounts or deposit accounts. It helps facilitate payments. It helps facilitate trade. Also, if you need sort of working capital or term loans, it also provides those sorts of services. And pretty much everything around that, which could be even things like foreign exchange, where you need to buy and sell foreign exchange. And in the commercial banking business, our customers range all the way from corporates who have these operational needs down to small businesses that have similar needs. And then retail banking is just where you move from businesses who need operational requirements to individuals that need operational requirements. So we cover the whole range of retail all the way up to corporate on the commercial banking side. And then on the investment banking side, it's largely corporates and governments.
In terms of the investment banking space as a sort of career on the whole, looking at the entire bank, it can often be incredibly competitive to break into the industry, get your foot on the ladder to become an analyst. And, if the base number for analysts was rounded to 100, for the amount of associates, there might only be 50. And then if you got the ladder, 25, 20, 10 MDs, partners, etc., all the way up to the CEO. So it's sort of this pyramid in which there's less and less people over time. You managed to become the CEO of FCMB. What was the process that led you to that position in the first place? And for anyone that's listening, maybe they're 20 years old, just coming out of university, that wants to become the CEO of a bank or another company, how can they live their life in a way that enables them to become one of the best and become the CEO of a bank like you did?
So I think the first thing is that you've got to be a mission champion, right? You've got to actually like what the company that you're working for is doing, and you've got to feel that mission resonates with you personally, and you've got to live it. You've got to work for it. So it's not really about just earning a salary and climbing up the corporate ladder. It's really aligning with that mission. I think the second thing is that people can do one of two things. You can either sort of focus on mastery, where you are just very good at one thing, or you can say, I want to be a generalist and I'm willing to go around and do different things. It's at some point in your career, you have to break away from being a specialist. And as a leader and a CEO, you have to be a generalist, because there are very few businesses in this day and age that do just one thing. There will be one or two, but it's quite rare. And I think that you've got to have that curiosity to be ready to try different things in the company you work for. So in my particular case, I worked I actually started my career in debt capital markets. I did some work in risk management. I worked in equity capital markets as well. And I would say that those were the initial areas that I worked in on the investment banking side before I then actually pivoted to commercial banking. And there was a very specific reason why I did that. And a lot of people don't realize, but commercial banks make a lot more money than investment banks. So when you look at return on equity, JP Morgan or a Bank of America will typically have higher return on equity than a Goldman Sachs or a Morgan Stanley, maybe. It also depends the size of their asset management business, which tends to be very high ROE. But if you take investment banking on its own, Commercial banks are much more profitable. The other thing is that if you're in the third world and you choose a career in the third world, the global capital markets have kind of concentrated themselves, I would argue, in just 2 or 3 countries and regions. The US market, you could argue the EU, but I would even say that's questionable, and to some extent China, right? And if you're and if you're an investment bank, you have to have the ability to work in multiple markets to generate the scale in order to afford the talent. The problem with investment banking in third world countries is that their markets are quite small. So frankly, they won't be able to afford you in terms of just salary if you stay in investment banking. So I think from sort of growth opportunities, from the profitability of the business and the industry, I then moved into commercial banking at a time where people thought it was unsexy, but actually that's been a far bigger earner for us than the investment banking side, largely because, in Africa it is slightly different, but also because fundamentally commercial banking is actually a more profitable business.
Correct me if I'm wrong on these numbers, but I believe that when you first started as CEO, the bank only had 200 employees, but you've now built that up to over 10,000 employees, more than 4 million customers, over 200 branches, as well as expanding to the UK, and having raised more than $500 million in equity for the business. What were the keys to this success, and how did you go about doing it?
Wow, yeah. So, as you said, there were many keys, probably not one thing. I think, ironically, and I reflect on this a lot, I'm now in my sort of early 50s, and a lot of this stuff I did at a much younger age. I was the youngest CEO to run a bank in Africa that I know of. But I was lucky that I was surrounded by a very good team. And I think, always had this philosophy of hiring better than yourself, hiring people that were experienced, make sure that you have a really good and supportive board. And, when you have that, then you can afford to be naive, right? And I think naivety is actually quite important for success, because the minute you know too much, you will have many reasons in your head why you shouldn't take certain risks, right? And one of the first things that I did that moved us from 200 employees to eventually the 10,000 that we have is to say that we had to evolve from being an investment bank and go into commercial banking. Very few investment banks, will intentionally do that. And if you recall, Goldman flirted with the idea of retail banking when they launched Marcus, and they pulled back. But I think obviously the incentives for them for staying in that business, staying where they were, is because the market is much bigger and they could make enough money. Ours was more out of necessity. But even then, in our region, you've also had a number of investment banks that said, let me stay as an investment bank. I think having a great team, right, and being quite naive that you're ready to do things without knowing the real risks yourself, and you have the courage. And in fact, when people tell you this is the risk, as long as they're supportive and will help you work on de-risking that plan, I think you're more likely to do it because you have that conviction in yourself. But the minute you yourself doubt that this is doable, you won't even, take that chance. And I would say those two things were extremely important. I'll pause there because I'm sure you have other questions.
Yeah, I think it's interesting because I believe that if you look at any of the big companies in the world, they all started as an idea at some point. And I bet you if you went back to that period of time when, Steve Jobs was coming up with the iPhone, Bill Gates was, coming up with Microsoft, there would have all been times in which people told them that this isn't going to work. But it's that sort of naivety to want to build it, to try it anyway, that disproves the haters and what enables you to go from simply an idea to where you are today. From that point, despite the naivety, you've got to have had some form of direction to even know this is where we are now to where we want to get to. What was the goal when you first took over as CEO, How does that goal look like now for the bank, having grown so much more? And if the bank was doing so well under your leadership, why would you leave?
Great. Okay, so I think that the first goal for us was survival, right? Because we were in a business investment banking that was highly volatile. You weren't very liquid in terms of balance sheet. And we saw what happened to guys like Lehman and so on and so forth. So I just knew from a very early stage, literally when I came back from business school, I was like, this wholesale banking model is not sustainable, and really started to try and move the business away from that. So the first was survival. The second was then try and find niches in which you can be a winner, right? And focused on being dominant in certain niches. And that does a couple of things for you. Number one, you will find that in traditionally, although I think in this sort of digital age that we're in, things are changing. If you're not a niche leader or you're not a general sort of market leader that's very big, it's very hard to deliver return on equity that'll cover your cost of capital. In other words, it's actually quite difficult to make enough money to keep your shareholders happy. So we had to find the niches that we could dominate, and we successfully found those. A lot of mistakes as well, to be frank. So it's not like it was just a smooth journey to find those niches. And today, we dominate in certain things. In consumer finance, in something they called embedded finance, we are a clear market leader with about 30% market share in our chosen markets. Interestingly enough, in agricultural lending, which is a totally different space, we are a dominant and clear market leader. And now where we're beginning to also own the market to some extent, I would say, is around the cross-border payments and digital banking space that we are very much moving into what is quite a white space, actually. I mean, the niche we've chosen is to effectively bank the global citizen. So what do I mean by that? Wherever part of the world you're in, if you're of African origin, we want to enable you to bank like a local, right? Rather than having to go through very expensive payments through SWIFT and all those sort of things. And as the world sort of demographically is changing, as more people are emigrating out of Africa and so on and so forth, the need to be able to serve them wherever they are in the world is increasingly important. And it's a huge market. Remittances into Africa is over $100 billion. Small businesses that need to make payments cross-border with Africa, is a multi-trillion-dollar flow of activity. And most US banks won't touch that because of the risks involved from a sort of know your customer and anti-money laundering perspective. So again, finding those niches to dominate is key. You will do the plain vanilla stuff that everybody else does if you are, like ourselves, a group, and also because your customers need it, right? And they could choose to go and get that elsewhere. But if you've already invested in the infrastructure, some of that plain vanilla stuff you can do. So for us, I think the goal then became to find big niches, right? And then look to lead in those niches. And that's what we continually look for. Why did I step down? So very simple reason. I wish it was that I knew when the right time was, and it was, when the ovation was loudest. Thankfully, I didn't get fired. But Nigeria, where we're headquartered, is one of the countries that has a very unique system where you can only serve as CEO of a large bank for a maximum of 10 years, right? Nowhere else in the world I know does that. So you have a term limit, like a president or an elected official. And so after I'd done my 10 years, I needed to step down, which for me was actually welcome, because then I could focus away from our banking activities to some of the other things that I've talked about: asset management or investment management, financial technology, and really just helping us create a broader ecosystem around the bank. And that's been what my focus has been for the last 7 years since I stepped down as CEO of the bank itself. And I now run the holding company that owns the bank.
Was there ever an internal idea to base the bank somewhere else so that you would have continued to be able to be CEO? I mean, even as a holding company, it enables you to have some oversight whilst also be able to do other things. Did that ever sort of come to mind, or do you think that it was still something that still felt natural to do, to move on to the holding company?
Yeah, I mean, it would have been quite impractical to base it elsewhere because we have a very large retail customer base. Nigeria is, it is going to be the fourth or fifth most populous country in the world. It is a country where the opportunities in retail are massive. It's a very entrepreneurial country, and it's below the radar for many international banks, to be honest. And if you find in most markets, be it in the US or the UK, the biggest banks are typically domestic. So if there's a big retail opportunity, you can't really capture that as a foreign bank. If you look at it today, government is one of our biggest employers. It's really very difficult for you as Barclays to say you want to bank the civil servants in the US. They're not going to give you that business. So retail banking especially is a very domestic business. We have created other parts of our business. For example, our fintech businesses are based out of London. We have a wholesale banking business in London as well. So there are certain elements of the group that we base outside of Nigeria, but the bank that I ran, which was our sort of flagship bank, is very much in Nigeria. And today, I think maybe, I don't know which document you read, but you mentioned 4 million customers. We now have 15 million customers. So
I was trying to make you look good. I was trying to make you look good by you saying the higher number.
Thank you, appreciate that.
From a
So yeah, go ahead.
Go on. No, you go on. Go on.
No, I'm done. That's it.
I think I was thinking it more of I can recall a number of years ago, I heard that Google were now based in Ireland or something along those lines. And if I look at the gambling company Flutter Entertainment, which owns FanDuel, which is now its biggest business, and they moved from the London Stock Exchange to the New York Stock Exchange, I wasn't thinking more from a boots on the ground change. I was more thinking from a intellectual property headquarter base, but I can totally understand why, from a domestic standpoint, it means, it seems like a much better and smarter thing to do to remain in the country that has the majority of your customers. From sort of an extension of your point on naivety, I want to kind of use another word, which is kind of a synonym, it's kind of not, but the word optimism and your confidence in the future. How do you balance that optimism whilst also being realistic when building in volatile markets?
How do you balance optimism with being realistic? So I think there's probably 4 things I would say you need to think about. Number one is you've got to set very high standards, right? And that's the brand of optimism that we pursue and I pursue. So a relentless belief that excellence is within your grasp, right? And the best way you do that is that every little thing you do, and Harvey, I must commend you. I'm not trying to flatter you, but what you're doing with this podcast demonstrates that you are exhibiting that excellence. The little things you do, it matters because you get into the habit of just doing things very, very well. That's what's going to set you apart from the pack eventually. So I think that's one.
Thank you.
So setting very high standards is key. The second thing I would say that you need to do is you need to align everything, right? Your people, your lifestyle, and just align. And that way you will find that you can realize optimism a lot more easily if everything is aligned, right? And you can afford to be optimistic because you see things just work, right? And you get tailwinds from alignment. The third thing I will say is that you've got to de-risk, right? You've got to find out what can go wrong It's not the enjoyable part of a job, but spending time on saying, what are the things that can go wrong and how do I make sure they won't derail me, right? Doesn't mean that you prevent them from happening, but if they happen, how do I sort of cap my downside kind of thing? You've got to de-risk because bad things will happen, right? And then I think the final thing is data. You've got to be able to, you've got to have a thirst for data so that the decisions you're making are informed by something beyond emotion or just having a hunch. Instinct is great, but that instinct eventually will need to be backed by data, even if that data is your experience when you've pursued your instinct, like what is happening, what is the market telling you, and stuff like that. You've really got to pay attention to data. So I think those sort of four things together can help ensure that optimism is as much as possible fulfilled.
I think when I was younger and I was learning about, cash in a bank versus stocks versus bonds, private equity, venture capital, real estate, you learn about risk versus return. And I think I kind of had a misconception when I was younger, because there's the often graph of the S&P 500 and its growth over the past 80 years. The S&P 500, for those listeners that don't know what that is, the 500 biggest companies by market cap based in the United States. And I think there's a misconception that people think that it goes up by 10% every year, when it's actually some years it goes up by 20, some years it goes 30, some years it goes down by 20, but the average over that time is 10% a year. And sort of by extension of that, and seeing how stocks do, how private equity does, how real estate does, cash as well isn't actually a riskless investment. The only riskless investment until recently, having been downgraded, was often seen as the US Treasuries, because they had the AAA rating, and so they'd always pay back money over time. But even having money in a bank account isn't risk-free. There is some element of the money being lost, as what happened with Silicon Valley Bank a few years ago. Being a global bank, as you mentioned, and catering mostly for those that have roots or relation to Africa, what have you found that a customer wants from a bank? How do you offer that solution to your customers? And how do you offer certainty to customers in times of crisis?
So can you just repeat the three questions? What they want from a bank, and what's the second one again?
Your solution to it, and how do you offer certainty in times of crisis?
Okay, very good questions. So what do the customers want from a bank? Was that the first question?
Yes.
Right. Solution and then certainty. So look, I think that I would say that you look for two things from a bank: peace of mind or empowerment. Those are really the two things. To know my money's safe, to know that my transaction will get delivered on time and complete. So if I want to pay for this pair of sneakers, I know that it'll get there, and the card would work on the POS terminal or whatever it is. So I think that peace of mind is extremely important from a bank. Then I think the other is empowerment. And it could be empowerment, everything from empowering you to finance your aspirations, like going to college, right? It could be empowering you to be able to do that transaction in China, or that transaction in America or Mexico or wherever it may be, right? That you feel is critical for, your business to get ahead. So organizations should, and individuals should look to banks to really be providing one of those two things. And if you can't deliver one of those two things, you are likely not to be around for much longer. And do it better than others that exist in some way, shape, or form. The solutions that we provide to offer either peace of mind or empowerment, I've kind of hinted at some of them. They would fall into maybe a small handful of buckets. You have a bunch of payment solutions. So you offer payment solutions, you offer financing solutions, which could be borrowing directly from the bank, it could be raising money from the capital markets, but we offer those financing solutions. We offer protection solutions, and not necessarily insurance, could be derivatives, right? That I don't want I don't want to be hurt if interest rates move in the wrong direction, and loans I have or whatever it is end up costing me more. So we also offer protection solutions. And then of course we offer investment solutions, which could be anything from deposits that give us a higher return all the way to giving people access to the stock markets, or offering our own investment products or funds that we manage. So those are some of the solutions, and there are a whole bunch of others that I haven't got into that would fall somewhere around those. Now, how do we provide certainty in difficult times, I guess, was more or less the question. I can't remember how you worded it, but I just noted down the word certainty. I think nothing in life is certain, right? So I don't think you can give that certainty. But I think a starting point is your culture as an organization. If you're known to do the right thing, if you're known to be professional, to be ethical, to never operate beyond your means or take risks that could put people's money at risk. I think ultimately, and if you always ensure that your word is your bond. So it's really about building that trust and then living that trust, right? And I think if you do that, even if you're a small institution, you will find your customers will have that sense of certainty. The only way you can really give 100%, in fact, I don't know how you can give 100% certainty. Maybe I would argue is that if you are so big that government feels you're too big to fail and they would need to bail you out if you have a problem. But that would only give certainty for depositors. And as I mentioned to you, there are many other products. There's payments, there's investments, and you can't give certainty with some of those things, because if things do go wrong, there's typically not always a lot you can do. You can build resilience and redundancies with payments infrastructure, but I think ultimately it comes down to the culture of the business. If your customers feel that culture tangibly, they will reward you with it by entrusting you with some of the most critical aspects of their lives, which is really their money.
We've touched on a bit as your role as now the leader of the group, having mostly talked about now running the bank. But I want to go into a bit more detail in your new role, or more recent role, being the CEO of the FCMB group. How has your role changed from being the CEO of the bank to this new position? How do you go about managing so many different people in groups? And you touched on this as your culture as an organization, but what is your leadership style like? So how has your role changed from CEO of the bank to CEO of the group? How do you manage so many people? And what is your style of leadership?
Okay, so how's my role changed? So the first thing is I fly on planes a lot less, because as you know, when you're running a bank or any operating entity, you are the chief sales officer, and you have to do a lot of selling. And as a CEO of bank, I was doing a lot of selling and I was traveling a lot. I think the second thing is that even though our holding company is regulated, because we don't hold depositors' money in the holding company, the intensity of the regulation was lower. So I spend less time engaging with regulators directly. I would say the third thing is that the operational scale of my work was far greater when I was running the bank. You have, hundreds of branches, you have millions of customers that you're directly responsible for. You have payments infrastructure, you're worried about cybercrime and all these other kind of things that you have to deal with. So it was very, very operational. And, I'm a Manchester United fan for my sins. And I was just reading Alex Ferguson's book on leading, and he talked about as a coach and a manager, he wouldn't be on the pitch at practice. He wouldn't be on the pitch with the players. He would be in the stands or on the sideline watching. And some coaches are different. And I think one of the real challenges about being the CEO of a bank is that oftentimes you have to be on the field. And that for me actually doesn't deliver the best kind of leadership. The beauty about being in the holding company is that you're on the sidelines or in the stands, and you can see and hear everything that is going on a lot better. And that, I would say, is what my job is like today. Now, today, I would say that I spend a lot of time engaging investors, because anytime any of our operating companies have to raise money, they do it through the holding company. I spend a lot of my time trying to build culture, because I can see people's behavior. I can see things a lot better. So a big part of my work is actually, building that culture across the group, right? And we have something which we call a culture of excellence version 2.0. We call it version 2.0 because we started with a culture of excellence. Like with a lot of organizations, you have sort of the messy middle where you kind of drifted. And then we now realize that actually it is so important. And also in this digital age, excellence in a digital age is very different. The standards, and I'll give you an example. Have you heard of something called the Net Promoter Score?
No,
It's
I
a
haven't.
very popular. It was popularized by a consultant from Bain, the management consulting firm, and every significant American company has a Net Promoter Score, which is a common scale for measuring its service standards. And in the pre-digital age, a very good Net Promoter Score for a bank like ours was maybe 50 or 60 out of 100. In the digital age, you need to be at 90, right? So that's like almost in an exam, right? It's
Yeah.
kind of like,
An A.
before it
An
was
A.
an A used to be a 70 or 75. Now it's
Yeah.
95 because they expect that you get everything right. So, for us, version 2.0 in terms of excellence just means much higher standards, than we had before. So culture is a big part of my job. If I move on to the next point, how do I manage, right? It's interesting. You have to learn how to manage through boards of directors rather than managing, executives, right? Because in a holding company structure, you should not be directing the CEOs of your portfolio companies directly. You should be influencing things through governance. That's not to say that they won't bounce things off you before they take it to the board, but it's a very different management style. And you have to learn to manage by influence and not by directing, because you're not in any of the individual companies. Of course, you carry a lot of weight. You can vote people off the board. You can decide where you want to allocate the capital. But, ultimately, you can't direct people, go and do this. And that requires, just the art of delegation becomes, much more significant when you're in a holding company. Now, what is my leadership style? I think is the last thing. I would just say it's evolving. I'd love to tell you that it's exactly this and I'm this amazing leader and stuff like that. But honestly, it's evolving, and I think you've got to have, just the most important thing is I try to be a self-aware leader, right? I solicit feedback. For me, it's very important to get feedback frequently. Do regular sort of 360-degree feedback from peers, from people that report to me, from people that I report to, be it a chairman or something like that. So, that for me is important. But different stages of my career, I think I've probably been a different type of leader. Sometimes hard charging, sometimes a bit more consensus building. But I wouldn't say I'm sort of one type.
I want to transition more to the state of Nigeria, the economy, investing in Nigeria. And I've got like a load of points, which I'll read off, but none of them the specificity doesn't matter. It's more just a top-down thing. The stuff I was curious about would be like the state of Nigeria, doing business there, something that often comes, Africa as a whole sometimes gets a bad rep of corruption. So if that's a real thing you have to deal with or not, misconceptions people have about Nigeria, and yeah, that'd sort of be the whole. So business, is corruption a problem? Misconceptions, is Nigeria a good place to invest in? The specificity of your answer doesn't matter. I'm more just curious from an outsider perspective that hasn't been to Nigeria, hasn't engaged with it as much, and kind of just hears stuff from, the worldwide press about what doing business with and in Nigeria is like. It'd be fascinating to learn from someone actually in Nigeria, building business there, what that experience has been like.
Okay, great. So, I think that for me it was a very conscious choice, not only to move back to Nigeria, but also to choose to build my career here and stay here in spite of many opportunities. And even in this sort of post-COVID era where you can do everything on Zoom, I still choose to work from Nigeria to do a lot of stuff. I think that it's surprisingly a very safe country in what I would describe as in the safe urban areas, right? And I would say, there are safe rural areas as well. You will always find there'll be pockets of areas that you have very high crime, but broadly it is actually a very safe country. That's one. And I think it's very safe for a couple of reasons. It's a deeply spiritual country, right? So people actually are very emotional people, right? They're not cold. So you don't get cold violence kind of thing, right? And there's a high degree of empathy. I think it's also very community based. I was at a dinner party in London the other day, and I was speaking to a banker from Goldman Sachs who'd never been to Nigeria, and he was asking me the same question, and this was in London. And I was saying, one of the funny things is that, every couple of weeks you will have somebody ask you for money in Nigeria, right? Because there's so much poverty. And now, because of WhatsApp, they'll just shoot you a WhatsApp message, and then they know that you have digital banking, so you can't say, sorry, I've got no cash on me. So it's like, can you just send, and you end up just sending people like, small amounts all the time. But you'll probably find that because there's no social safety net, so many people rely on that. And ironically, I think digital banking has actually increased the social safety net because it's easier to ask for money. But, people like myself are in that position where you are, and please make sure this doesn't go out to millions of Nigerians because I'll start getting, texts to send them money kind of thing. But in any case,
Can't promise that.
Yeah. But I think the point is that, there's a very strong sense of community in any issues you have. There's almost no problem that you can't solve, right? And I think that's really important. The state of the country, it's growing. GDP growth rate is about 3-4% a year. Could be much higher because it's coming out of, I would say, some very kind of unorthodox economic policies where they try to fix the exchange rate. I think that it's on the ascendancy. I mean, it's growing much faster than Europe. It's growing faster than, I would say, America. It's probably not growing as fast as China. But there are a few things that if they're unlocked, I think we'll see a sort of 7 to 9% growth rate for extended periods of time. It's a high growth population. It's a very young population. Average age is 19. In Europe, average age is in the 40s. And I think in America, probably close to that as well. So it's full of opportunity. Of course, there are challenges. And you talked about one of them, which is corruption. I think you can avoid corruption if you need to. I think it's not something that I find I ever have to deal with. I mean, you could argue that because I'm at sort of the top of an organization, but I think that if you focus your business model we also have a very clearly stated purpose in our business, which is to foster inclusive and sustainable growth in the communities we serve. So we have a slight impact bias, and we have certain metrics that we track. And you tend to find that when you're helping communities become more prosperous, when you're helping businesses that are doing the same, or governments that want to do the same, you don't really get people trying to extort from you or things like that. So really, I find that I face more corruption issues outside Nigeria than I do face in Nigeria. But that's my experience. But I absolutely get it that that's not the case for everybody, right? But I'd say that's definitely there. Definitely, our economy has been affected by corruption historically by governments that maybe have stolen money or have not executed contracts properly and awarded contracts to contractors that they somehow got a kickback, or have basically commandeered oil blocks for themselves that were sort of part of the nation's wealth. And of course that's affected the macro environment. So I would say where corruption has affected us is more in terms of the macro than in my personal life or in the micro cosm of my business. Is it a good place to invest? I think if you want to make change and if you are very mission driven, it's an excellent place to invest. I think it can deliver good returns. I mean, we've been very happy with our investment here. I think the key thing, if I'm being brutally honest, is that it's a high margin environment. So it's very good for income, right? So if you want to do investments that give you good income, I say it's fantastic. So for example, if you wanted to put money in a deposit with a Nigerian bank in US dollars, you could earn anywhere from 5 to 10% per annum US dollar interest rates. You're not going to get that from a US bank, right? And that's partly because of the perception of risk, but it's also because the margins are much higher, right? In doing business here, right? And take somebody like myself, a global citizen. I don't keep deposits in Western banks, even when it's in dollars. I may keep transactional balances there. And that's because, the rates are just so much better here. And you find other sort of income products that are just so much better. If you're looking for sort of capital gains, I would argue that with the rate at which technology is evolving, if you make the right bets, your capital gains returns may be better in the US or Europe, right? US, probably not Europe, but US. But also you've got to diversify that portfolio. And my advice to people is that even if it's 5%, 1%, a portion of your investment portfolio should be in Africa. And then if you make the right bets, certainly some of those would be Nigeria because it's one of the most promising economies. And, and there are years where your Nigeria portfolio will perform far better than your America portfolio and perform better than, like this year, I think Nigeria is obviously outperforming the S&P 500. So you've got to have a global portfolio strategy, I think. But of course, you've got to know what you're getting into and so on. Yeah.
Yeah, going back to my point earlier with risk return, a lot of the return you were talking about with the 5 to 10% interest rates is there because of the innate risk or the presumed risk with the economy in a whole in Africa and in Nigeria. But a lot of the growth you talk about with going from 4 to 5% or 3 to 4% to the 7 to 9%, that will sort of occur when the unrealized growth starts to be realized. But there's also a lot of high potential as Nigeria goes through its own sort of revolution with more industries becoming more prominent and a higher rate of competition and more you have more brands like Apple and stuff start to come out of Nigeria. You can see it with the likes of DeepSeek when that uprooted ChatGPT I think it was in February of this year, and the US stock market lost over $1 trillion in a day. And it shows that, people are looking for alternatives elsewhere. I have two questions. One being, where is the gap in the Nigerian economy right now, which would take it from the 3 to 4% to the 7 to 9% returns? And the second question I have is, if the interest rate is so high, 5 to 10%, with putting in British pounds or in US dollars in a Nigerian bank account, having studied a little bit about the banking system, I know that the rate at which you would loan out to people would have to be a lot higher than the 5 to 10%. I mean, that's banking 101. So if the interest rate is so high when lending out to potential entrepreneurs in Nigeria, wouldn't that then disincentivize them from starting new enterprises, expansion, growing their businesses? When the interest rates get really low in the US and the UK, a lot of new businesses are created. But when you add a lot of regulation or higher interest rates, it's a lot harder to happen. So yeah, just to repeat, what are the gaps to take it from 3 to 4% growth to 7 to 9%? And how can entrepreneurs grow their businesses if the interest rates from an entrepreneurial standpoint are above 10%?
So you hit on one of them, right, of the obstacles to growth, which is high interest rates typically can be a constraint for growth. Because if you look at the US economy, for example, its growth rate in terms of, its GDP is largely achieved through leverage, unlike maybe a China and a few other markets. Now, what is it going to take for Nigeria to move from 3 to 4% to 7 to 9%? I think the first and most important thing is consistent economic policy, monetary policy especially, fiscal discipline, and just consistency, right? I think continued improvement in rule of law, so people feel that they will have redress to law and people will respect contracts, which I would say is improved massively over the last decade or so. I think the third thing, which has been a gap for some time, I think is, it's no secret that electricity in Nigeria is not universally available. But that, since maybe 3 years ago when they deregulated price for electricity, prior to that, it just wasn't commercially profitable to invest in electricity because your cost of your fuel and feedstock, be it solar from the sun and the panels and everything else you needed, batteries, or be it gas or any other form of fuel to power your home or your factory, the cost of that was higher than the price, and then government was covering the subsidy. And so you just weren't getting people willing to invest in the infrastructure, and government didn't have the money. They've since deregulated the prices of electricity, and you're seeing very steady investment coming in. In fairness, I think it's going to probably be about a decade before any business that wants to can get electricity at an affordable price, cheaper than the diesel generators that people are having to invest in. But I would say you get consistent policy, continued improvement in rule of law. Thankfully, as challenging as colonialism was, I think one of the things was that, we did get to base, and this is a very controversial statement because many people see, and I agree that colonialism was bad, but at least that there were systems and laws and other things that were kind of put in place that we've adapted, but we didn't have to start from ground zero. So the legal infrastructures are very much there. It's just a case of following them. And then it's also familiar to people in, America or Asia or Europe, that it's based on English law, right? Basically. So I think that the rule of law is definitely getting better. I think consistent economic policy is going to be key, and I think getting sort of stable electricity. The entrepreneurial energy is just boundless here. One thing that I think is very unique about Nigeria compared to a lot of other African countries is, first of all, we're a very open economy. Anybody from any country can come and set up a business in Nigeria, no issues, right? In spite of that, the most successful entrepreneurs are Nigerian. And you don't find that in most other African countries. You'll find it's either Europeans or Indians or Lebanese, or even in some cases, a few Nigerians are very successful in other African countries. But if you look at the statistics in America, it's the same thing. The Nigerians in the US are very, very driven. They're very much go-getters, academically outstanding, sports-wise. They tend to do very well, very hardworking, and they bring that to the game of business and entrepreneurship. So you do find that the human potential is massive, and then they're also very creative people. So I really don't think it would take a lot to unlock that level of growth. There was a second question. I got a bit lost in that first one. What was the second question again?
The second one was, how can entrepreneurs go about unlocking growth with high interest rates?
High interest rates. Got it. It is a challenge. I would say the first thing is you need to fund your business with a lot more equity than debt. So having highly leveraged businesses is a lot trickier here. I think the second thing is that you need to be in businesses that have fairly high profit margins so that you can afford to service that debt. And there is also quite a lot of, but it's not sustainable. For certain industries that have social impact, there is a lot of subsidized lending and grant. There's something called blended finance. I don't know if you've ever come across that space, but that's where you can use grant money, subsidized loans, and commercially priced loans. And loads of people from family offices in the US to the likes of the Gates Foundation, Bill and Melinda Gates Foundation, to a whole bunch of other philanthropists are providing soft capital from a pricing point of view to African businesses. And a lot of African philanthropists are doing it as well. So you're finding, if you're in sectors like education, healthcare, agriculture or food security, renewable energy, things that will promote gender equality. So we have, for example, a loan product where we give loan to women entrepreneurs at 0 interest rate, right?
Wow.
We lose money on the interest rate, but we know that we're also building these women-owned businesses, and it's been phenomenally successful. And in the end, you're not losing money because all the other business that you get from these female entrepreneurs, we don't give it to every sort of female entrepreneur, but you meet certain criteria, you can get it. Ends up being a bit of a lottery because we can't give it to everybody, obviously. Yeah. But we find that in the end, it's been a very successful product for us. And it goes under a brand that we call She Ventures. So the point I'm trying to make here is that there is a lot of blended finance available as well for African businesses or Nigerian businesses, if you're in sectors that are helping to develop the economy.
I want to ask you one final last main question before doing 3 quick closing questions. And that last big main question is, what is a question that I haven't asked you about that you think would be important to talk about on this podcast?
I would need a minute to think about that, and I'm mindful of time. If I think, what are the things that are really important? Where do I spend a lot of my time now? I think, technology and particularly artificial intelligence is something that is absolutely critical to any business leader and any business today. And if I ask myself, potentially what impact will that have? And I think that Nigeria and Africa generally will be one of the biggest beneficiaries of artificial intelligence, because it's going to democratize and accelerate so many things that, other economies and countries are already mature, right? And even with AI, may not necessarily be able to achieve growth rates that are significantly higher. But you're going to find in countries like this that you will see companies and economies being able to deliver exceptional growth and profitability through AI, and opportunity as well for others. So that for me is a huge part of where I spend a lot of my time now. Just and we're at the early stages. We probably have about 4 different AI projects going on right now that are unlocking real value. I know companies like Amazon may have 100, but I can see us easily having 20 or 30 different AI projects going on at any point in time that will be designed to realize value within a 12 to 18 month time frame, 12 to 24 month time frame. Yeah.
My 3 final last quick questions are as following. The first one being, you can look at any scope of time that you like, 3 months, a year, 5 years, 10 years. What's next for you?
Okay. 3 months. I probably hope to be in North Carolina visiting Joel. But professionally, I would say the next phase, I see myself stepping down as CEO of the holding company and moving more to a governance role. And at that point, we'll be focusing, of course, on playing my role as a shareholder and core investor in the group, but equally making sure that there are other areas of potential in Africa beyond financial services that I want to help unlock so that we can have more inclusive growth. And so spend a lot of time thinking about that. The beauty is that anything and everything that I do, I look at it as, not in silos, but as part of just expanding the ecosystem, right? So it would in some way, shape, or the other still involve FCMB Group, but I think that there are just so many other areas, from the creative industries to hospitality to food security to healthcare. There are just so many problems to solve. And for me, it'll really just be about looking for bigger problems to solve.
My penultimate question, if I was to ask someone in 100 years' time, how would you want to be described and what would you want your legacy to be?
How would I want to be described? Imperfect, right? Which we all are. So obviously that's not much of a description. But somebody who, even though is flawed, has made a very significant contribution to the development of his country, the continent, and mankind. Yeah.
And my final question, and I ask this to every guest on Personable, is what is one thing that you would want a listener to take away from this episode?
Wow. One thing. Hopefully, I think the one thing is probably that there's lots of things to take away. So you should probably listen to it 3, 4, 5 times, and then and hopefully each time you'll find something new. So listen to it more than once, and then listen to lots of other Personable podcasts with other speakers being grilled by HarveyBracken-Smith.
And if you had to choose one of your things, I'm gonna put you on the spot.
Okay, if I had to choose one of my things that I'd want people to take away, Um, I think the importance of cultivating a culture of excellence personally and professionally.
Amazing. Well, thank you very much for joining me on my podcast. It has been a huge honor to learn about your journey and for you to be able to share your perspectives to my listeners and to the rest of the world. I greatly appreciate your level of thoughtfulness to every one of my questions. I can't remember who said it, but I think Steve Jobs is another person that whenever people would ask him questions, he'd take a few seconds to respond to the question. And where as a child you're often told to answer a question quickly because speed and intelligence and all that, it's actually by being thoughtful and taking your time to think about every word you say matters. I mean, you even said it yourself, your word is your bond, so it matters what you say. I think the level of growth that you've been able to put into your businesses is unbelievable, and I'm hugely excited to continually see where they go moving forward. But I also appreciate your willingness to stick to what matters whilst allowing trends to take form in your business, for example, with your use of AI. So thank you so much, Ladi, for coming on Personable. It's been a huge pleasure.
And let me say just one final word as well. I want to say thank you, Harvey, for having me on. It is a privilege because today I think young people rule the world. And so it's a privilege for you to think that someone like myself will be worthy. I want to wish you the best of luck with Personable, best of luck with your career. And I will also be watching with very keen interest as you make phenomenal progress. So best of luck and good luck with the rugby as
Thank
well.
you, Ladi.
All right.